So it's been a long day, so we have one last presentation to go by our global partner StoneX, Mr. Charles Moser, who is the head of emerging market debt capital markets at StoneX. Charles will be delivering a presentation under the topic of road to investment grade. Please welcome Jack.
Thank you very much. Thank you all for attending. This has been a long day, so I'm going to make it relatively brief, hopefully. Mr. Deputy Prime Minister, ladies and gentlemen, I wanted to talk about the road to investment grade. I thought we'd end with a positive note, and everything I've heard today confirms what I thought when I was putting the presentation together, which is the fact that investment grade is in fact within reach, not in the immediate future, but within 10 to 15 years. And I like to talk about long-term visions and long-term direction, and what I hope to demonstrate here a little bit is, disclaimer aside, that there is a road to investment grade for a country like Mongolia, landlocked, relatively small in size. I'd like to talk about another country, a country that was rated in the year 2000 B1, B2, population slightly larger than Mongolia's, land mass about 1/4 the size of Mongolia, but also very low population density, GDP per capita about $3,000, negative growth. Coup d'etat had recently been attempted, and so the country looked far inferior to where Mongolia is today. If you look at it beside where Mongolia is today, Mongolia has a higher rating, as mentioned by my DCM colleagues, had a recent upgrade. Population is below that of this other landlocked country that's also in essence surrounded by two larger countries, GDP per capita far higher, in fact quite high by these standards. And these numbers have all been adjusted to today's inflationary levels. Reserve levels in Mongolia are actually quite healthy, and external debt to GDP is relatively low on a comparison basis. So the country I was talking about was Paraguay in 2000. What I'm talking about as the alternative of where I think Mongolia can go and why. But there's some lessons. What I want to do is share with you a little bit some of the lessons of what Paraguay did and how the similarities will play out with Mongolia over time. So as you can see from this first graph, Paraguay went through a very difficult period prior to 2000. Growth was negative. For the 20 years prior to 2000, the GDP per capita in Mongolia had actually fallen 0.8% a year. So it was a country that had an oversized private sector, or public sector, I'm sorry, was dependent on electricity exports, and for about 60 to 70% of the GDP, very high concentration in that and in agriculture. And Mongolia has, and Paraguay, as you can see, turned things around quite quickly, and within about 20 years or 15 years currently they have an investment grade from Moody's, and they're knocking at the door with regard to two other agencies. So you can see the similarity with what Mongolia went through in the prior few years with the closing of China, with the drop in commodity prices. But again, you see that the road is quite similar, and the story that Mongolia can tell is quite compelling compared to what Paraguay went through. And if you look at what Paraguay did, you're going to notice that there's a great deal of similarity with what Mongolia talked about today. The things that Mongolia is talking about doing today are exactly the things that get you to an investment grade rating. So growth. Mongolia has a much stronger growth than Paraguay did in that period, and in fact, than Paraguay had for the 20 years that got it to investment grade. Their average growth rate, I think, was about 3%. Fiscal prudence. I was recently in Ulaanbaatar, and it's clear that top of mind is managing the deficit and staying within the limitations of what can be spent, and not inflating the debt level is very much part of what we've heard today and what we've heard in the past. Solid macroeconomic management, buffers. The $5 billion reserve, I think, is a very strong reserve level, and is one that the markets recognize as providing some protection from the commodity dependence of the country. institutional strengthening and transparency, that's something that Paraguay hasn't managed, and that's still holding Paraguay back. The fact that there's still big corruption issues and so forth. Mongolia's transparency and focus on transparency is something that the markets will embrace and moves in the direction of the positive ratings. Bolstering financings. The MDBs have been a big source of financing, and it's a source that you should take as much as you can get of, because it's your most advantageous source, not only in terms of cost, but also in terms of needing to roll it when you need to roll it when there's a crisis. PPPs, public-private partnerships, there was some discussion of that. That's one of the things Paraguay did very well. They didn't build their infrastructure with their own money. They used someone else's money to build the infrastructure. But in order to do that, they needed to create confidence that private property was going to be respected. And that's something that I've seen in a lot of the legislation, a lot of the presentations today, is going to play very well with the rating agencies. Diversifying the economy, obviously that's central to fixing this, or to moving toward investment grade. In Paraguay's case, as I said, they were dependent on electricity exports. I think one of the areas that Mongolia can grow is in electricity exports. Other areas, so renewable energy is huge. Tourism is something that can bring a lot of additional money to Mongolia. Server farms, something I heard about today, and I think plays very well with the very young population in Mongolia, but also the availability of renewable energy, the ability to generate renewable energy. The meat exports, that sort of thing as well, as mentioned in the last presentation, I think would be key to creating that diversification. One other thing I wanted to talk about was the way Paraguay has developed their capital market, because I think there's an interesting lessons there also. You know, smaller countries have to have slightly different strategies than large countries. So in the case of Paraguay, what they did was they focused just on dollar bonds. They didn't do euro bonds. They didn't do yen bonds. They focused exclusively on dollar bonds because there's a limited pool of liquidity. Fostering liquidity providers. So in Paraguay's case, they rotated among 5 banks, and they made sure they had not only banks that had big league tables, but also banks that provided liquidity. And I think one of the things StoneX does very well is provide liquidity in the bonds. And liquidity is critical in making sure that your sovereign bonds and to some extent your non-sovereign bonds don't differ too much in yield. And so the more market makers you have, as Florian mentioned, the less of a problem you're going to have when there's a dislocation in the market, because there's a bigger pool of folks to redistribute. One other thing Paraguay has done, which isn't imminent for Mongolia, but it's something to think about, and has been mentioned a couple times, is MNT issuance. So Paraguay, 2 years ago, shifted from issuing dollars to issuing in their own currency only. And in as much as they don't have a liquid market locally, what they do is they issue linked to the local currency. In their case, the Guarani. In your case, the MNT. So if you can issue, eventually, if you develop a deep enough local capital markets, you can issue in your own local currency. And that's hugely advantageous for non-exporters in the country who need to fund in their own currency. So that's one other thing that's been done. So that's what Paraguay did. If we look at how it compares to Mongolia, and thus my thesis that you're going to be investment grade in 15 years, a lot of the same things are being done. Fiscal prudence, I think, is something that's very much top of mind in Mongolia today. Bolstering the finances, diversifying, doing public-private partnerships. I think the sound economic management, controlling inflation is high on the agenda. You have to monitor consumer leverage to some extent, and the fiscal deficit. Not the fiscal deficit. I'm sorry. The commercial deficit with offshore entities. Solid economic buffers. I think the large reserves that you have played well in your favor, and I think the commitment to keeping that reserve level at $5 billion has helped in these very volatile times. Investment in infrastructure, as I mentioned, I think bringing foreigners in, which is all about creating confidence, and I think you've done an excellent job in doing that, and I think the coalition government is part of that message of stability, which is going to play very well with international investors. And finally, as I say, promoting not just dollar bonds, liquidity, rewarding the folks that do the research. We do research. StoneX does research on Mongolia, gets the word out there, provides liquidity in the secondary market, but also not issuing too many bonds. The Paraguayans, when they issue, they're 7, 8, 10 times oversubscribed in their issues because there's so few of those bonds. And I think, as one of my colleagues mentioned, you have been very good about being prudent about not increasing too much the stock of your bonds, because there's always a temptation to do $1 billion, $2 billion. There's always a banker at the door with more cheap money. But in the long run, getting to investment grade saves you probably 200 basis points at least. I mean, Mongolia is already trading as a BB, but the difference between Mongolia and Paraguay is about 200 basis points. So that 200 basis points over 10 years is 20% of the value of the bond. It's a lot of money. So in conclusion, I think Mongolia is on the right track. I think there are lessons that can be learned from other similarly sized countries. I think Uruguay, Panama, Paraguay are 3 countries that come to mind. The Paraguayan case, I think, is one that you can use with the rating agencies as well to show that you're well positioned and that you're well on the way to getting to investment grade. Thank you very much.